Welcome back. You're watching Business Q&A with me, Bronwyn Seaborne, and today we're looking at ESG investing. ESG stands for Environmental, Social and Governance, and it's an approach to investing that takes those criteria into account. For more detail on that, I'm joined by Liberty's Divisional Executive for Retail Investment Proposition Management, Famida Singh. Famida, thanks so much for your time today. So ESG is certainly a buzzword at the moment. So at the top, give us an example of what ESG investing is and how it benefits the investor.
Thank you, Bronwyn. So ESG is environmental, social and governance, as you've pointed out. And during the pandemic particularly, these concepts have become quite socialized across industry. Globally, you'll find a lot of people moving towards it. And essentially what it means is socially responsible or responsible investing. So if you consider and unpack ESG, E stands for environmental, and if you unpack the environmental, issues such as climate control, it's about how do we invest in ensuring that we've got a positive and sustainable future from a climate perspective. If you look at the social implications, how do we invest for positive societal impact? And then if you look at the governance issues, particularly of late, how do we invest with moral and ethical issues at the forefront of what we do? And so if you look at ESG investing, and if you look at what asset managers are doing, if you look at the various financial services products out there, how do you consider all of these aspects as you consider where you want to invest? So asset managers, by way of example, will have either ESG boutiques, or you'll have specialist thematics that we have available inside of different investment products, or you'll actually have private equity where you would have some ESG concepts that are taken into consideration.
Okay, so that's how some asset managers approach this to make sure that they are really investing in ESG and doing it properly. If I'm an investor, though, and I'm looking to put my money towards, say, a green initiative, for example, what do I need to look for?
There are many things that you can look for, and there are many products that are available. So it does depend on, firstly, your time horizon. It depends on your risk profile, Bronwyn. So you've got to consider all of that. And then you've got to consider, okay, as it relates to a green theme. So for example, if you look at investing in property, Liberty 2 Degrees, listed property portfolio, first in South Africa to be green rated. So they've got full green rating. And first in industry to actually have a full retail sector underneath that portfolio range that is green rated. That is one of the options that you could look at. You could also look at an ESG thematic within an investment product that's a little bit wider. And there you could look at a range of equity stocks. And inside of that, you could have an ESG thematic that maybe focuses on climate and on the environment. You could also go and choose a specific stock that focuses on environmental change. So there are many, many options available.
I ask that because there has been some skepticism in the market about ESG investing, and there are rumblings that you can lose money by investing this way. So how do you respond to sentiment like that?
I think that this is something that is actually relevant beyond just ESG. You've got risks in investing irrespective of whether it's ESG or not. Now, of late, obviously, when you use the ESG tagline, it's very easy to tug on heartstrings. It's very easy to run on a thematic that people have started getting familiar with. And yes, there is a chance that people can lose money if they choose the wrong partners and the wrong providers. And so I think rule number one, choose a provider that is an accredited financial services provider. This is very, very important for investors. Choose brands that you know and trust. I think that's a very good start. And then you've got to look at saying, okay, if we step back, and if you look at a study that was done by Morgan Stanley very recently, they've looked at the performance of 3,000 US mutual funds that were ESG funds. They've actually outperformed the stock index during the pandemic by 4.3%. So there's some studies that have been done to suggest that actually, if you look at companies that have sustainable investing behind their ethos and philosophies, they actually do outperform. And so if you choose the right providers, if you choose the right brands, and if you stick to tried and tested investment philosophies, you should be okay.
Well, on that note, Famida, let's leave it there. We're out of time. Famida Singh is Liberty's Divisional Executive for Retail Investment Proposition Management. And that's where we leave things for this episode of Business Q&A. But there's lots more to come on Business Day TV, so stay tuned.